Okay, welcome to a capital hungry educational breakdown and webinar on the US stock market. Specifically, we're going to be looking at Dow Jones as an example. This is going hand in hand with the central bank and US corruption webinars. And this is mainly my opinion of what I see behind the scenes, what really happens, in my opinion, with the stock market. And we're going to talk about it from a core concept of how the stock market should really work and who really provides liquidity to the stock markets, how banks work, and all of that. And then you're going to see why this might make more sense. Okay. So, for those of you who do not know, the stock market at the core, when you're really talking about it, a company's stock value should be directly proportionate to their performance or their sales income from their service, whatever it is. Okay. So, for example, if you have a company that strictly sells apples and they are increasing their Apple sales every single week, or sorry, every single year, every single quarter, whatever it may be, their stock value should directly increase. But at the core, where do their profits and sales come from? The consumer, the working class person, the person who goes to work, the person who first goes to school for years to get a job, then works every day, slaves away 40 to 60 hours a week to earn enough money to go to the store to get this food to survive, right? To buy these necessities, use these services, buy these goods, whether it's transportation, food, clothing, whatever it is. So basically, in turn, without the consumer, there is no company, and it goes hand in hand, but you get the idea there. Okay, without the consumer, you really have no company, so you can have no profits to increase the valuation of a stock. Now that's just the core concept. There are a ton of other factors that come into play that value a stock, from factors such as fundamentals, herd mentality, just pure hype, rumors, facts. Like, there's tons of other reasons. But in essence, that in reality is what should increase or decrease the price of a stock or the valuation of a company, is their profit versus their expenses and the income and the revenue they're earning, and how healthy the actual company is, right? How is the company's employment? How is the company's wages? How is their growth? How is their economic outlook? Very similar to how we look at countries. Okay. So, with that being said, understand that most of the money as well, besides just the consumer who is going out and spending and using these services. Now, the same way that that money goes to these corporations who then use the money and profits they earn and put it back into the market so they can invest and earn huge percents using consumers' money and other people's money, banks' money as well, right? That same concept, the consumer who also goes and puts money, the middle class worker, the average worker, the poor, we're pretty much going to call it, who also go and try to save some money, keep it in their bank account, try to go pay their bills, save a bit on the side. What do you think banks do with, how do you think banks operate? Banks wouldn't exist either without the consumer, the working class person whose paychecks are going into the bank. They keep your digital balance set, right? But they are actually in turn using your money to go make investments in the markets, whether it's equity markets, currency markets. It's going on 24/7 behind the scenes all the time. Bam, 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 money being moved from hand to hand. Okay? So with those concepts being understood, that most of the money that banks use, the majority of the money that banks use, the majority of the money that corporations earn, the majority of the money that is involved in stock markets comes from the consumer, comes from the middle class, the working class person. They are the hamster on the wheel, the engine of the economies. Okay? So now, what my concept is about the overall US stock market, with how I have seen how corrupt the central banking system is, how corrupt money is, you guys know my stance on that. If you don't want to see an opinionated version, it makes sense to me, because I'm going to show you guys straight facts, and it lines up with everything I'm telling you guys that I've talked about in the US corruption webinar and the central bank corruption webinar, and it lines up with everything from the US debt, how the government and politics are set up, how the feds jump in, everything. Okay, so with that being said, look here. The US stock market has been forever bullish. Why? Because if you have a collapse in the US stock market, that basically means every single company in every single sector from energy, technology, clothing, entertainment, hospitality, whatever it is, food, pharmaceuticals, they all go under and the US economy is basically bankrupt as a whole. We know that the feds will never allow this, so they can print mass stimulus and print as much money digitally as they want and flood the markets and prop up the markets. Okay? Let's keep that concept in mind that the feds have the power to do this whenever they want, and they have the understanding, the knowledge, the historical knowledge, because even we can fucking see this shit coming. Okay? They have the historical knowledge, the understanding of when to anticipate these events are going to come. You don't think they knew when coronavirus was developing that it could lead to a mass outbreak and lockdowns? This is all man made to lead to a transfer of wealth. Regardless if it's the 2008 financial collapse based on mortgage-backed securities, regardless if it's the 2000 collapse when Y2K scares happened in the 1980s when the market collapsed, this economic cycle, this transfer of wealth, this system in play, and what happens every 10 to 15 years is nothing new. Really use logic and common sense now. These central bankers, these financial analysis, these economists are supposed to be absolute experts on every data figure in the book. You don't think they can forecast or see that this shit was coming? It's all man-made. Even I can. You guys saw me forecasting shit alone in huge plays, and I've been studying the markets for only 3 years, right? So think about it. Really zoom out, remove yourself from distractions, and think about how the world actually works. Okay? So now, most of the money that is involved in the stock market or that banks use comes from the working class person, the money that comes off their tax to go into their RSP, to go into their mutual funds, to go into their 401k, their pensions, whatever it may be. Look, now the market is forever bullish because we understand that concept that the feds or the overall, they can't allow the US stock market to crash because that overall means the US economy has crashed and all those companies that make billions of dollars go bankrupt and all those jobs in turn are lost, right? Pretty much these consumers and corporations work hand in hand, but corporations and central banks have been taking advantage of the middle class and just enslaving them. Okay? And it all makes sense. Now, understanding that, understanding that it's very easy for these people to understand one more thing. The market is made up of what? Buyers and sellers, winners and losers, money moving from one hand to another. So now, whenever you see, and first of all, what's one thing you can notice? Look how even with this crash, look how bullish the stock market is. Look how since the 2000s from where we have data, look how bullish the stock market is overall. It's insane. Okay? And understand that the feds have the power to inflate the markets and prop up the markets as they please, and that has been discussed, and we have talked about that. So now, with all this technology, all this understanding of economies, understanding what would crash the markets, what can bring market fear, understanding how it works, you don't think these economists or the guys in the market knew the 2008 financial collapse was coming? But what do you have? You have years worth of liquidity being generated from millions and millions of working class Americans being moved from their hands, their pockets, their savings accounts to the 1%. The 1% takes that money, takes that liquidity, and buys up the stock market for the lows, and they're set for the next 10 to 15 years until there's another minor dip that takes out a lot of late buyers, and then this process repeats. Okay? Whether it's a 2008 financial collapse, whether it was Y2K or a physical Iraq war, or whether it's a coronavirus and a biological war. unless we have a major change in the central banking system, this process will always repeat. We might see the lows tested again, but this is just going to continue up for the next 10 years. Okay? Unless we have a major shift in revolution in how our actual global money system works. Does that make sense? All that happened here is the same thing that happened here. You had working class Americans funneling money into corporations, into services through every day-to-day spending, buying things, whether from Christmas retail spending for their family, vacations for themselves. People, all you do all your life is make money and spend money. That's all we do, right? But most of the time, the money we make goes to fuel other people's dreams and wealth while we're living paycheck to paycheck, day to day, the zombie life, the 99%. We're trying to break out of that. But we have to understand how this whole money system works to break out of that. Okay? 1, 2, 3, 4, 5, 6. And you have to understand, this is only trading view from 2004. You probably had 10 years worth of financial gains in the stock market, all from the working class people, get wiped out in 1 year with the 2008 financial collapse. Then interest rates get cut. Then the feds jump in. Why didn't the feds jump in when it was crashing? Why didn't the feds jump in when they noticed the signs ahead of time? Because it's just money being moved from hand to hand. Sell high, buy low. Do you get it? It's just common economic principles, but nobody is taught these things, so everybody ignores it. You had the whales got the fuck out of the market and probably jumped in shorts here when they saw all the signs building of the 2008 financial collapse. And this was all predetermined anyways. They got the 1% got their signals, right? The people who are unaware of where their savings goes, unaware of where their mutual funds or retirement or 401k goes, they're just the regular dumb fucking citizens of the world. They have no idea what the fuck's going on. They get completely wiped out in 1 year, 10 years worth of gains, lose their pensions, lose their jobs, lose everything, get stomped on right back down to the ground. And then you have that money go back into the 1%. That 1% take that money from the lows, and then they ride the wave up with the feds. Because the feds are the most corrupt motherfuckers who are part of this. So many questions. Why didn't they prevent it when they saw the signs? Why didn't the feds jump in sooner? The feds have unlimited printing potential for the last 100 years. It's not like they just got granted this access from somebody. You get what I'm saying? So many questions, and it just gets forgotten. 10 years later, 15 years later, boom, same thing. Now it's the coronavirus. 1, 2, 3, 4, 5, 6, 7 years worth of financial gains from the working class citizens. Same idea, wiped out in a month or two. This is just the yearly candle for now, but the actual chain of events happened in maybe a month. 6 years worth of financial gains wiped out in a month. That money went somewhere, and look, from these lows, from the structure point, bought up from 18K, the previous candle body points, supporting with the feds. How come the feds, who have seen financial collapses before, who know the signs of economic data of what presents a financial collapse, how come the feds didn't prevent it ahead of time? How come they didn't already start injecting the economy and stop the crash at 24K, at 22K? Do you get what I'm saying? So if you watch the US corruption webinar and the central banking corruption webinar and actually understand how the money system works, think about this now, right in front of you. The transfer of wealth you can physically see on the quarterly, yearly chart. You can see the transfer of wealth. If you understand what is printing these candles, whose money is going into these 10 years worth of gains, this is the working class people, 30 million citizens of the US. Understood? And they get wiped the fuck out in 1 year. This right here is money being taken away from those 30 million jobless Americans. Taken away from their 401ks, their savings, their pensions, and the whales jump in right from the lows. Then the Fed's money printer goes brr, and they fucking don't stop. Brr, brr. It's a corrupt system that's meant to continue to keep the 1% in power and keep them rich and keep the 99% distracted by social, political, religious, stupid nonsense and not understand what's really happening behind the scenes. So the US stock market is forever bullish, and you cannot fight the Feds unless there's a major change in how global economies run. The US stock market, in my opinion, is used as a tool to transfer wealth from the poor to the rich every 10 to 15 years. The US stock market is primarily made up of working class slash middle class liquidity and consumer activity. Consumers who use goods and services which allow companies to profit. Banks which take consumers' hard-earned money and put it into the stock market. This is meant to build over time, so eventually, right? Eventually, what the bank tells you is your investments are supposed to build over 5 to 10 to 15 years while you're working your fucking ass off to build your retirement, to build your pension, so after the age of fucking 65, you can finally retire and do what you want. But no, it gets wiped out in a year. It gets wiped out in a year. It gets wiped out in a year. Right? False. Every 10 to 15 years, you have a major catalyst, whether it's a real war, a biological war, technology related war, a political trade war, economic war. It doesn't matter. This was inevitable. Just with how we have innovations in technology, there's more money in the world overall, the population is higher, the volatility was heavily increased. You can spread information like wildfire, and information is the key to volatility, volume, and a lot of the fundamentals behind the scenes is related to information. That's why some of these data feeds cost so much, because information is so important. And in our current world, in our current economies, information can be spread so fast, whether it's false or true, that has to be validated. But regardless, mass information that's spread, even if it's a rumor, can have direct impact on economies or direct impact on these currencies and different trading instruments we trade. Okay? So that was just what I see, a great theory that I see. It's not like it's anything new, something that I always talk about. This is something that's great. You can watch in hand with the USD corruption webinar and the central bank corruption webinar. And then now we're just going to jump into a Dow Jones breakdown as well. Okay, so DJ here on the 12-month chart. You can see we are overall extremely bullish, and you cannot fight the Fed and you cannot fight the smart money sentiment, which in turn favors corporations profiting and the system staying the way it is, which you guys understand now. Okay, you can see that price came down after wiping out years worth of financial gains to test these candle body areas around 18K flat key level. Price has already done almost a full V-shaped recovery, what they call it, with the heavy stimulus from the Feds just printing out so much US dollars and buying out US bonds and injecting the economy, pretty much propping up the economy. So even with this mass fear sentiment, the Feds have not let the stock market dip any lower than 18K. And it makes sense that they jumped in after all the citizens and 30 million people got fucked and put back into the ground, which is what you get now. Okay? So what all I'm going to do now is that we understand that Dow Jones does have heavy potential to go into new highs above 30K, especially if we get long-term economic rebound. Of course, this yearly candle is still very young. We are going to go down the time frames. I do see potential for a wave 2 of coronavirus and some market fear to bring in a second potential down leg and possibly test like 22K, 23K, and then continue up when we have economies actually rebound, coronavirus vaccine, and lockdowns eased, and economies fully opened up as well. Okay, what I'm looking for as per fear catalyst is coronavirus cases spreading globally and deaths increasing, continued global terrible data, central banks being on the dovish side, oil dropping below $25 a production level, and continued tensions between countries and trade ties. So if we do not have those confirmed, just for any real deep pullback you get on the U.S. stock market, just buy it. because you're working with smart money, you're working with the trend, you're working with the feds, and you are on that smart money sentiment side, and we do not have those fear confirms. I'm just going to mark out zones from about the top peak area to about like 16,000 points. More than that, but still. So of course, these yearly levels have very strong significance. Each yearly candle body close or open is 365 days worth of price data. Just looking at the quarterly chart, you can see the heavy recovery the economy has done after the Feds jumped in and started injecting the economy. You had years worth of years worth of financial gains wiped out in one quarterly period, still holding that bullish market structure though. It would be ideal to come dip and test some of these lows as we are retesting some strong areas of resistance and price sensitivity, but we have to have those fear confirms working in hand with us. Just created some nice areas of interest for us. Okay, so you can see the key levels mapped out using the higher time frame candle body conjunction points, and just the higher time frame candle body points, just rounding them off, are being respected very well. Just in recent price action, even where we're getting some of the mass sell off, some of the very strong bounces. So now, looking at some of the recent price action, when you look at the weekly, I still see a lot of potential for upside. You can see how we have fully corrected a lot of the downside move. We are creating a potential support with this liquidity grab with some of these hard candle body conjunctions and coming above this price sensitivity. We do have the Feds continuing to like their routine injections of the market in supporting the whole coronavirus cause, the major transfer of wealth we want to call it, which we saw happen here. And we know that smart money sentiment does support continued optimism and the strength of these corporations and their stock prices staying high, right? So with that being said, we are going to cover what we would need for safe sells. Safe sells would easily be if price comes back below 24.5 or 25K. If price comes below 25K in this strong sensitivity area to the left, and we have mass fear confirmed with a potential wave 2 of COVID, we can easily see a potential double bottom on the higher time frames around 20, and price come to test better buy areas around 21 and 21.5K, and take out a lot of late FOMO buyers who are jumping into the market and missed the initial buy bounce and transfer of wealth there. So when we go to an intraday perspective, I'll show you what I mean. You can see price is still very bullish in market structure. We had a very strong liquidity grab, our area of interest, and the third tap on a bullish trend line. We have a price already did create a high at 27.4K. If we come down and even retest 25K and create a higher low and create another support, still a great buy spot. And if we break above 26.65K, again, another great breakout buy spot to test this previous high and continue up with the Feds to 28K and 28.5K, as you can see the key levels. Safe sells would be a break of this bullish market structure, validating exhaustion from this upside, and as we have do some consolidation, as we do have some consolidation building here. Noticing global equities are falling off their highs. Noticing VIX is starting to inflate and turn bullish. Dollar index is gaining strength. Gold is gaining strength, and fundamental fear catalyst confirms. Okay, if we have those hand in hand with a break of this technical structure, price below 25K or even 24.6K, we can start riding the sell waves down as a bear market might take over and take out a lot of these late buyers, and especially as a lot of the whales might close off some long positions if we do have confirms of market fear and a wave 2 of coronavirus. Otherwise, we're continuing to look for pullbacks and any significant pullbacks to ride this structure to test the previous high and into like the 28K, 28.6K, riding with the smart money sentiment and optimistic route unless we have that change in market structure. We have some US data later in the week, which can bring some market negativity, especially if it follows suit with the economic weakness the Feds have signaled. We just have to understand that optimism is still strong. We can even see this heavy whipsaw move where price grab liquidity at this key area of interest around 25.9. I'm also going to put a medium term zone here as well. But we had just some headlines that brought initial fear, and then Trump waved off those headlines, and you can see how quickly optimism will jump on the scene when you're looking at the lower time frames. That quick snapback in price. So yeah, heavy manipulation there. Safe sells will of course be below 25K, in my opinion. We break below 25K, break this bearish market structure, and have those fear confirms, which I'll highlight, then we can take advantage of some safe sells with a fear-filled market sentiment. Watch the U.S. data we have later in the week. Continue to watch headlines related to U.S. and China trade war talks and central bank speakers and anything related to wave 2 COVID. Of course, the newsroom is still active and running, and I'm just going to set some alarms as well. These key levels might be a bit different from the last ones, but still great guides and ranges to use. Oh, I gotta delete my old ones. Oh, shit, I didn't delete those. See, I'll do that after. I just gotta delete the old Dow Jones ones from the other breakdown. Okay, so I'm going to save this and upload it to Vimeo. This is also the start of this webinar. It's also great to watch hand in hand alongside the USD corruption webinar. Of course, we're looking at Dow Jones and the indexes in the current market environment. You're more looking at the overall global market sentiment of fear or optimism and what's impacting these geopolitical catalysts, like pretty much the coronavirus and these trade tensions right now, right? In normal market conditions, we might look at other figures such as the actual earnings of companies and actual company performance in various sectors within the Dow Jones index or within the S&P 500, right? It's just in current conditions, it's been heavily impacted by fear and greed sentiment and just the heavy stimulation by the Fed and that smart money greed and transfer of wealth is my opinion what the real use of the U.S. stock market is. If you guys disagree with that, no problems, but it should make sense. But the breakdown, regardless, makes sense. The breakdown isn't opinionated. It's going to be continued upside if we hold this bullish structure as we have had this high formed, and we do have market optimism still fairly strong. Oil still holding above $40 a barrel. VIX turning back into bearish structure. Dollar index fairly bearish. Optimistic headlines via Trump would only take safe sells below 25K, break of structure, and that market fear.